Hey everyone, and welcome back to Top Success. Welcome to Business Central. Today we'll be taking a look at the economy and how it has been affected due to the current events, and most importantly, we'll be showing you how you can put your money to the best possible use. Businesses have taken a big hit, and even though companies will find their feet again, right now all the stocks are at an all-time low, which means that it will be much cheaper for investors to buy stocks in companies right now. Make sure you stay around until the end of the video, as you don't want to miss the best stocks you can invest in right now. Number 15, Kimberly-Clark. Corp consumer goods giant Kimberly-Clark, which is nearly a $50 billion blue chip company, is another stock to buy for May. Also offering a 3% dividend, KMB trades for about 20 times earnings and is beating the broader market year to date, with shares essentially flat through April. With a diversified portfolio of personal products under its umbrella, one especially relevant branch of the company's business today is its consumer tissues segment, which sells some of 2020's hottest ticket items such as paper towels and toilet paper. KMB also sells soaps, wipes, sanitizers, and a whole bevy of other high-demand products all around the world. Consumer goods have long been considered a favorite of defensive investors in times of recession and uncertainty, and while Wall Street traders seem to be gaining confidence going into May, Kimberly-Clark's predictability and its staple of trusted brands, such as Cottonelle, Kleenex, Scott, Huggies, and more, make it an attractive holding in a horribly derailed global economy. Number 14, ServiceNow Incorporated. ServiceNow provides enterprise cloud computing solutions. The company offers a cloud-based services that automate workflow within and between the separate departments of an enterprise. The company reported Q1 2020 GAAP results on April 29, including 34% YOY quarterly revenue growth and earnings per diluted share of 24 cents. Currently trading at $296 per share, it is a very fast-growing stock that has lots of potential. Investors could see great returns by investing into this company. Number 13, Shopify. The story here is pretty simple. Shopping is pivoting online. Shopify builds those websites, and they do a better job of building those websites and giving retailers the tools they need to succeed online than anyone else out there. Consequently, Shopify is turning into the irreplaceable backbone of modern commerce. Investors are already noticing this. After briefly dropping by 50% on concerns, Shop stock has rallied to new all-time highs. Number 12, Advanced Micro Devices Incorporated. Advanced Micro Devices is a global semiconductor company that offers products such as microprocessors, chipsets, graphics, video and multimedia products, and provides assembling, testing, and packaging services. On April 28, the company announced GAAP Q1 2020 financial results, including revenue of $1.8 billion, up 40.1% YOY, and diluted earnings per share of 14 cents. The stock is currently trading at $55.51 per share, so the potential for growth is being known by investors. The future looks bright for this stock. Number 11, Lockheed Martin. Lockheed Martin is the world's largest defense contractor in terms of revenue. In 2019 alone, the company brought in just under $60 billion in sales. Military and defense stocks are a popular staple in just about any portfolio. Their government contracts offer shareholders resilience when economic uncertainty looms, plus growing demand gives them upside potential to boot. Number 10, Facebook. Facebook, the social media giant, has had many investors waiting for it to dip. The company owns 4 social media apps, with each of them having over 1 billion users. Each of them are very sticky and quasi-utilities in today's digital age. In other words, Facebook will maintain a multi-billion user ecosystem for the next several years. Accordingly, the company will continue to dominate the global digital ad market, which will grow at a steady pace once the economy gets back to normal. Facebook projects a 20% plus revenue and profit grower for a lot longer. Getting that huge growth potential for just 18 times forward earnings is a steal for long-term investors. Number 9, Lululemon. Lululemon ranks number 1 among clothing and accessory retailers, and on Monday, Lulu stock rose over 3%. Paralleling the major indexes, Lululemon has been showing a V-shaped recovery. Such snapback rallies tend to have a higher likelihood of failure, but so far the uptrends for Lulu stock and the general market have continued to thrive, and it is forecasted to continue. Investors should still react with cautious optimism, but optimism nonetheless. Number 8. Netflix. Streaming giant Netflix had a tough 2019 thanks to escalating competition concerns. But going into 2020, we were bullish on NFLX stock because we believed the company was going to report a series of quarters which proved that those competition concerns were overstated. 2 quarters in, 2 quarters down. Netflix has reported back-to-back record quarters with superb subscriber growth that didn't show any competitive headwinds. As a result, Netflix stock has soared to all-time highs, and this rally will persist. Netflix's earnings reports going forward should be quite good. You will get big subscriber growth numbers, and that's all investors care about. As those big user growth quarters roll in, Netflix stock will keep going higher. Number 7. Alibaba. Alibaba has also been beating the market year to date and has held up far better than many might have expected, given its exposure to China where the pandemic originated. Due in part to China's autocratic government, swift shutdown, tight monitoring and contact tracing, China's economy has been able to stem the bleeding faster than the initial consensus outlooks. During shutdowns, Alibaba's impressive logistics network and dominant position in the country's e-commerce market combined to make it an even more essential part of the Chinese economy than it was to begin with. Trading at 22 times earnings, Alibaba is growing like a weed, with revenue up 38% last quarter and expected to advance another 30% in the next fiscal year despite the impact of the virus. Number 6. NRG Energy Incorporated. NRG Energy is an integrated power company that produces, sells and distributes energy and energy services. The company provides an energy production and cogeneration facilities, thermal energy production and energy resource facilities. NRG Energy will pay a quarterly dividend of 30 cents per share on May 15. It is currently trading for around $33.71 per share and is a great value stock at this time for investors. Number 5. Chipotle. In 2006, shares of Chipotle Mexican Grill closed their first day of trading at $44. Now those shares are worth over $934, up more than 21 times their initial value. It's safe to say that Chipotle stock has already created some millionaires over the last 14 years. Chipotle Mexican stock broke out above a deep $909.98 buy point on Friday and remains in the 5% buy range amid Monday's 0.9% rally. The burrito maker's RS line is at new highs, confirming the stock's leadership potential. From what we can see, Chipotle Mexican Grill will probably beat the market for the next 3 to 5 years. We think that this stock growth is worth buying and could make some even more millionaires for long-term investors. Number 4. Apple. Apple is one of the most recognizable companies in the world, with a market cap topping $1.2 trillion even after the sell-off. In fact, AAPL stock still climbed 53% from March 2019 from March 2020. Because of Apple's long-term performance and reliability, Money Morning executive editor Bill Patalon considers it one of his accumulative stocks. That means it's a stock you can keep buying more of year after year to increase your wealth. Investing into a reliable company like Apple is always a great idea. Number 3. Colony Capital. For all you dividend investors out there, this one's for you. Colony Capital Incorporated is a global investment firm located in Los Angeles, California. While most REITs focus on 1 or 2 real estate markets at most, apartments and shopping centers or office buildings, Colony is more diverse, getting involved in multiple commercial real estate markets, private equity, debt management, and more. Why is now the time to buy? After the March sell-off, CLNY shares traded for just under $3.50 each, and we think it could climb to 6 times that much. Add in a 12% dividend yield, and it's easy to see why Colony Capital is a must-have REIT for 2020. Number 2. AMD. AMD stock was a big winner ahead of the stock market crash. Shares advanced more than 66% from a cut basis 35.65 buy point after a breakout on November 4. Now, in the current stock market rally, AMD could be another potential winner as it approaches a new buy point. Shares are rapidly approaching a 58.73 buy point, according to MarketSmith chart analytics, amid Monday's near 5% gain. The stock found support near its 50-day line in early May. The stock's relative strength line is nearing a new high, a bullish indicator. And finally, in at number 1, we have SoftBank. SoftBank is a Japanese holding company run by Masayoshi Son. Son made his name by investing $20 million in Alibaba Group Holding Limited in 2000. By the time BABA went public 14 years later, Son's stake was worth $70 billion. Today, Son and SoftBank run the Vision Fund, a $100 billion private equity fund that invests in promising young tech companies. As a private equity fund, SoftBank's Vision Fund often invests in companies years before they've gone public. These are firms that the average investor simply doesn't have access to. When they finally do go public, the share prices are much higher for the general public than they were for institutional investors. That's why we say the IPO process is rigged against retail investors like you in favour of the banks and early investors. But when you own shares in SoftBank, you get to be one of those early investors. In other words, SoftBank tilts the game in your favour as a shareholder. Make sure to subscribe to our channel and hit that notification bell to stay up to date on all our new videos.